on then and take a look at some earnings. Tata Steel delivered an all-round beat in the quarter ending financial year 24. The India adjusted EBITDA per ton comes in better than estimates. However, when you look at net debt, that has just widened a little bit over 77,500 crore is what you're looking at in terms of net debt. And Ashesha is standing by with the earnings file. Ashesha?
Well, yes, Tata Steel has reported better than expected set of numbers. Europe EBITDA per ton loss has narrowed sequentially, meaningfully, and that is a big positive as far as Tata Steel numbers this time around are concerned. On a sequential basis, revenues have risen by about 6%. Margins have come in much better than what the street was working with. India operations continue to report good set of performance. India EBITDA per ton has come in better than expected, although on a sequential basis it has declined, and that is on account of lower realization and higher coking coal consumption cost in the fourth quarter. As I mentioned, European operations have reported a big beat this time around. Europe EBITDA per ton loss has narrowed from $178 per ton in the third quarter to $37 per ton in the fourth quarter. So that's a meaningful reduction as far as losses from European operations are concerned. Debt continues to largely remain stable at about 77,550 odd crores, and management has given some commentary with respect to transition of its UK business, where they said that Tata Steel will commence closure of its assets by June this year, and it will set up electric arc furnace by 2027. So all in all, nothing really to complain about. Numbers have been better than what the street was working with. EBITDA per ton loss has narrowed, and India operations continue to show resilience.
Alright, Ashesha, thanks for giving us that roundup on Tata Steel's numbers. Let's keep it going with Tata Steel. And earlier we caught up with Aditya Velekar at Axis Securities, who also decoded the numbers and shared his outlook on what the quarter for performance looked like. Listen into what he had to say.
Good set of numbers from Tata Steel, slight beat than our expectation. So Tata Steel India's EBITDA has stood slightly better than expected. Also, the losses at Europe operations have come down. So so a draft calculation indicates that the EBITDA per ton loss at Europe has came down from $178 per ton in Q3 to near about $40 per ton. So that's quite improvement. As far as outlook is concerned, the losses are expected to come down in future quarters as they transition from, as they close down their blast furnace 3 and 4 and heavy assets like coke oven, and as they transition towards the electric arc furnace construction. So in the meantime, they will be closing down the blast furnaces, and they will be using substrates of hot rolled coils, and they will be using to feed their downstream assets. So it will be primarily running on basically a trading based activity. So as far as outlook is concerned, the EBITDA per ton is expected to, the losses is expected to go down in few subsequent quarters.
Alright, then that was the important commentary coming in from Aditya Velekar as well about that all-round beat for Tata Steel. But let's move on.